Yeah, good morning, everyone. It really is a pleasure to see you all here in the room. It's a pleasure to see familiar faces and to know that for all of us, there's a heart beating for insurance. Let me start by welcoming our keynote speaker, also myself. Thank you very much, Shigeru Arizumi. Thank you so much for coming. And thank you for your leadership in making sure we make progress at the international level. As you say, it can be challenging, it can be difficult, but under your leadership, we were able to take, I think, a very important step. So thank you very much for that. And I won't welcome everyone personally, but I want to just lift out 3 people. I first of all want to also thank Commissioner Nathan Hudak. He's the commissioner in Wisconsin, USA, representing the NAIC, the National Association of Insurance Commissioners in the USA here today. So traveling from far, that deserves a warm welcome as well. And particularly because all the commissioners are gathering in Denver, but actually Nathan jumped on a plane to be with us today, so that is highly appreciated. Moreover, I want to say welcome to 2 first-time participants. First of all, we have Hugo Bassi from the European Commission. He took over from Martin Merlet, and we're very happy that we will be working together with you, and thank you for joining. And finally, as you all know, Michaela Köhler of Insurance Europe handed over her role to a new person. And first I want to say thank you to Michaela. It was a pleasure to work with her. But I also look forward to working with her successor, Thea Uthoff-Heu Jensen. Welcome here as well. Thank you for making the time already, coming on Monday. I think we had a good start. I also hope that you speak to many of us in the room today. Now, with that, and having heard the perspective from the international level, let me focus on some of the priorities of EIOPA. And I think what you will hear is that many of the priorities at the international level are also priorities at the European level. And that is indeed because we are living in an increasingly interconnected world where risks emerge in one region and then rapidly spread and impact economies, industries, and by extensions also insurance. And it is because the industry operates on a global scale that also supervisors need to do so. At our annual conference last year, we looked ahead. We discussed emerging risks, and since then, a lot actually happened. Much has changed. 2024 was marked by elections in various parts of the world, including in Europe, and we still here in Germany have an important one to come in February. And we are also at the start of a new legislative cycle with the new Commission coming in and a new Parliament in place. So while inflation has eased, other risks persisted. The war in Ukraine is very sadly, but still ongoing, with potential further escalation at the horizon, and that is very concerning. Climate change is driving more frequent and intense weather events, and we've all witnessed them over summer, which I think the last one in Valencia really being devastating to watch and very concerning. The rapid developments of AI is also raising questions about regulation, security, but also possibilities, the need to develop, to balance that with risks, and similarly the rise of cyber threats that are really going up, also related to the war on the European continent, and it presents a concern on how we're going to deal with that. So if we compare the outlook of last year, what we see is that several of the risks that we discussed were not hypothetical. And I think that is something that we need to let sink in, that the risks we discussed today are probably also not all hypothetical or theoretical, but they will actually happen maybe within a year. Now, how are we going to deal with that in Europe? And I'm sure many of you read the Draghi report and the Letta report that were drafted to inform the new Commission on what has to happen. It outlines the challenges facing the EU. It offers concrete recommendations. They both highlight the need to rethink our single market and to enhance Europe's competitiveness. Europe, an old continent, must accelerate its technological development for the benefit of everyone. And insurers and pension funds are seen as key contributors to this, from building a savings and investment union and boosting savings through investment and pension products, to enhancing also European investments and thereby the European economy. Now, what does that mean in reality for industry and for supervisors? And here I think there are 5 things imperative, and those I want to discuss with you today. So the first one is we need to be robust and resilient. These are times of volatility, these times of risk. So robust and resilient is essential. We then need to truly live our purpose, to protect and provide. That's what this industry does. And if there was ever a time that risks needed to be managed, it's now. Building a market that is fair and inclusive. If we want to build a market, if we want to have the trust, build trust further, it has to be fair and inclusive. And while we do that, we have to be and become, probably become more than be, adaptive and data-driven to address emerging risks. And we need to get smarter and more efficient to deliver on this. Now, let me start with resilience, robust and resilience, because this is really the only way that our industry can support ongoing transitions. We need risk and evidence-based capital requirements to maintain stability, particularly during uncertain times. Now, some may argue that the absence of full-scale failures just justifies to reduce those requirements, but I would argue that we actually managed crisis without major failures, precisely because there was solid capital. Industry needs to be robust to withstand any financial distress that could lead to failures, and we have observed several cases, maybe not as a full-fledged failure, but some portfolio transfers were possible because there was capital, and that is how we prevented failures. We've seen the consequences of lowering capital standards back in the beginning of the 2000s, where cities globally were competing on the basis of lowering global standards to become the financial center. We also know where that brought us, and I don't think we want to go there again. The ongoing Solvency II review herefore is a very important legislation, and it will strengthen the resilience of the insurance sector. And it contains many amendments in which it reflects EIOPA's recommendations, and it also increases, I would say, the industry's capacity to both invest as well handle shocks. So, first of all, we welcome the Insurance Recovery and Resolution Directive that is in that proposal. I think it is good to have a mechanism that we know how to manage very stressed situations and not figure it out on the spot. I also think it's important that we consider that really insurance knowledge is involved. Winding down, as I said, is not always the best solution. Portfolio transfer could always be something that needs to be considered. So let's be ready in those cases where we have trouble. Second, the inclusion of a macroprudential perspective in Solvency II will strengthen our ability to address systemic risks, and to do that also as an insurance community who understands that risk. You're all aware of a big discussion on MBFI and the non-banks, financial intermediaries, and that includes insurance. There's always a lot of questions on how is insurance doing, and I think the fact that I can answer, well, it's heavily regulated already. It has its supervisors. And by the way, in the Solvency II review, it will have additional macro-prudential elements that will enable us to even see more. I think is a very important part of making sure that people really understand that we are aware of risk and we manage them. Third, EIOPA has made recommendations to the European Commission on an additional charge for fossil fuel-related assets to better align with capital requirements, where we, of course, also indicate that this decision needs to be taken in a broader context of level playing field and the broader financial sector. And fourth, we've strengthened the proportionality framework so that requirements are better suited to the size, complexity, and risk of individual insurers. Another element here where we can boost resilience of our sectors is the introduction of Digital Operational Resilience Act. So the operational resilience, that's another act that came in besides Solvency II. It sets clear expectation for financial institutions, including insurers, to withstand and recover disruptions like cyber attacks and system failures. And here I would like to share with you a comment that was made by a small non-life insurer that looked at what it had to do for DORA, together with a large group who was wondering if it wasn't too much. And he said, but Petra, shouldn't we look at DORA as a way how Europe together tries to be resilient against attacks that will happen in the cyber world. And so it's not so much about my company, but it's about a joint resilience as an industry, as a financial industry, as an EU. And I think that is, I much appreciated the view of that person from where he was with a very small regional non-life entity, but realizing that the DORA Act really is about a broader goal, a necessary goal to be resilient in time of cyber attacks. Looking ahead, the AI Act, together with Solvency II, will also be crucial in managing risks from AI's growing use in our insurance sector. As AI expands, we must ensure it's used responsibly. The AI Act provides a framework for transparency, fairness and accountability, and it helps to safeguard consumers' trust while fostering innovation. And meanwhile, those who really have looked at the AI Act and know Solvency II at the same time, there should not be a lot of things that you now need to do because of the AI Act that you were not already doing in the area of transparency, fairness, accountability, and safeguarding consumers' interests under Solvency II. So here EIOPA stands ready to also be pragmatic in the implementation, knowing we already had a lot in place. Now, why you need to be robust? So you are ready. Ready for what? To live your purpose and protect. And that's the second point. If there was ever a time to deliver on this purpose, it is now. The industry has an unparalleled role to play in the urgency of the growing gaps that we see, particularly in natural catastrophe as well as in pensions. EIOPA's own activities in addressing the net cat protection starts with improving the understanding of the gap. Where are they? What is it driven by? Can we measure it? And this is where our NetCat dashboards comes in. By focusing on, and we share that. We will update it again end of this year. And per member state, we will show what are the risks and how much of that is insured. We will also focus on prevention measures and also address why it is that there's such a low demand for NetCat insurance. And we are considering some steps on that side to develop. In collaboration also with the ECB, we are exploring policy options on how to better insure EU households, so affordability, and businesses against climate-related natural catastrophe. Last year, we issued a joint discussion paper where we proposed policy options aimed at increasing uptake and efficiency while creating incentives to also adapt and mitigate. Adapt and mitigate being key. But we have continued that collaboration with the ECB, and we will soon publish yet another joint paper where we get much more specific on how public-private partnerships could look. To keep NetCat risk insurable, we must start with adaptation and mitigation measures, and insurers can lead this effort through their ex-ante risk assessments and impact underwriting. And here you also need to be heard. You can use your data and expertise to incentivize citizens, and also EIOPA is looking into how we can share data that we have on these risks. And city and governments need to be helped to reduce their exposure to natural disasters. And indeed, from the IMF to the G7, to the OECD, EIOPA, we all work on it, but we also reach out to each other to inform the discussion and also the understanding. It cannot stop here. We need to consider mechanisms to pool and share the risks. Public-private partnerships will allow insurers and governments, but also other stakeholders, to distribute the burden of these risks, and it can help us to become more resilient. Now move to the other gap, which is the pension gap. It's a concerning gap. And here we need a range of solutions. The European Union currently has 20 people at risk of living in poverty, women a lot more even. And we see that the pay-as-you-go, the first pillar pensions are decreasing because we're an aging continent. Tailored, we need solutions. We need very, very tailored solutions because there are very big differences between the pension systems in the member states. And it involves social law, it involves labor law. We recognize that. But with some common approaches, we can make steps, and we need to take them with fewer people working and taking care of the elderly. With most developed pension markets, we see, if they're well developed, that they actually rely on a three-pillar system. So we really should adopt a holistic approach to retirement savings and consider all three pillars. And that is currently not the case in many member states, where the first pillar is essential. Now, let me first confirm that the first pillar is essential, but it's not sufficient and sustainable long-term as we currently are. And that's why we also, as EIOPA, we support the introduction of auto-enrollment in occupational pension schemes, encouraging additional savings, and in addition, financial education and simple retirement products, as highlighted both in the Draghi and the Letta report, should be prioritized. To take a more holistic approach to pensions, we first need to identify existing gaps. And this is why I also would like to highlight the importance of having dashboards and personal tracking systems. So personal tracking systems for the individual to see how much they have saved so far, what does my life look in retirement, and pension dashboards for policymakers, not only to see where there is a problem, but also to understand if you want to use public money to solve the problem, where can I spend it best to generate better outcomes. These tools will enhance transparency, it will highlight the urgency, and it will support also more informed decision-making. Finally, we do need to recognize that there is a cyber gap, there is a health gap, yet less data and analysis is now available, and we need to improve. We need to pay our full attention to this, because the risks are felt, the products are not always there yet, but the demand is rising. And while demand is rising and we're selling products, we need to be fair and inclusive. And that brings me to the third imperative. That we must be fair and inclusive is often said, but it is really key for our industry to remain relevant. You need to maintain trust. And that trust is closely tied to the perceived value for money of a product that was bought. Preliminary Eurobarometer figures, we just did a new one, shows that only 45% of Europeans believe that their IBIT products offer value for money, 30% is unsure, and 25% is not, does not think it provides value for money. That's not what we should have as a final stage. So there's some homework here. But that is also why in this context, together with the chair of ESMA, Verena Ross, we wrote a letter to the EU institutions highlighting the need for a meaningful review of the retail investment framework. And to this end, the strategy should avoid unnecessary complexity, ensure a level playing field, and minimize administrative burden for both industry and supervisors. And I think here we all agree that we are not there yet. But how can we bring that forward? The aim is to contribute to a true European market where consumers can invest confidently in investment and retirement products that offer real value for money. And I go back to, I think, also the speech of Shigeru Arizumi. Sometimes it's challenging, sometimes it's difficult, but just dropping it is not a solution. As it stands today, maybe also not the best. So we need to really come together and think on how we can make it better and use the opportunity of this review. And a key aspect in that is for EIOPA is value for money. In the end, it's not difficult. If you design and sell a product that offers value and you sell it to the right person, I think you're doing a good job. And let's be honest, the majority of insurance is doing that. But it's those who don't that we need to address. So we need products that are informed by behavioral insights and that are tailored to needs. And for most consumers, products should be simple, transparent, and easy to understand, particularly when it comes to trade-offs like safety versus potential returns, liquidity versus long-term gains. Here is where good products are needed. Here is also where good financial advice is needed. And that will build consumer trust, and it will build an inclusive financial culture. Now, I need to stress that fairness and inclusiveness must remain a priority at a time that industry is increasingly coming to rely on technology. Algorithms, AI-driven tools, and digital platforms offer great potential. They really do. And we see benefits, and that will also be in our consumer trend report. We see some positive use of AI to the benefit of consumers in our market. But we must ensure it's fair, and that means that there is a very important role for the human that is still also in the loop when advising the customers. And why is this so important? And I go back to the Draghi and the Letta report that clearly states that, which is good, if we deal with the pension gap with more savings, if people save more in insurance and pension products, if they generate with that more capital for insurance and pensions, the long-term investors of our economy, to invest in the economy, it really benefits the EU as a whole. But what we in fact are saying is we need consumers to move their savings from the bank accounts, they have it now, to more productive investments, including insurance products. But then we also need to make sure that these consumers have certainty and safety as they have in bank accounts. So we need to be able to act for consumers when they have issues in cross-border contexts. We need to be able to act for consumers when they have a problem. And that means two things. First of all, mechanisms at an EU level must exist to deal with cross-border supervisory concerns that cannot be addressed or are not being addressed at the national level. That is an exception, but it is happening and we need to fix that in order to prevent it to grow, but also to ruin a reputation of a good industry. And in this regard, I strongly believe that EIOPA, through its board of supervisors, EIOPA always decides with 28, not just with me, we must have the ability to intervene in those cross-border cases that remain unsolved because of inaction of the national responsible supervisor. To intervene effectively, EIOPA should be equipped then in those exceptional cases after agreement of the entire board with the same powers as a national authority to be used as a last resort following approval in the board. And such supervisory powers should protect not only the consumers, but very much also the businesses and the reputation of our market. And second, and equally important, in the harmonization of insurance guarantee schemes, we need to make progress. In Europe, insurers can operate with one license in 27 member states, but consumers are protected in 27 different ways. And in other words, we have created a single market for insurance, but we have not yet one for consumers. And that is what we need to work on. If we say to a customer, it's okay to take it out of your bank account where you have a guarantee and cross-border supervision that can actually have an impact, and you move it to an insurer, it's a good product. It's a good product, it's safe, it's supervised, and if there is an issue, we can solve it, and if we solve it and you lose value, there is a guarantee scheme. If we can somehow do that, I think we create wonderful propositions for Europeans to save better for their retirement and for then insurers to be able to invest more in the economy. Now, moving on how do we do that? How do we operate? So first of all, we need to be adaptive and data-driven. Technological change is already there. It's transforming our lives and business models, and there's much more to come. And supervisors, as well as insurance and pension funds, must be ready, and that means we need to be agile. We need to move forward. Data-driven, thereby, is essential. And we face data gaps on several fronts, and that must be addressed. Better data is crucial to assess risks, to understand gaps, to raise awareness. But it also allows us to evaluate if the measures we are taking are right. So we also must make sure that the data we collect captures the right information and supports good insights, enabling to monitor and address the risks. And initiatives like EIOPA's Natural Catastrophe Hub that provides open data and show we show how we can, through sharing, also share back to the broader economy and help you leverage on the efforts you made when you shared the data. And that brings me to the final point, being smart and efficient. To be smart and efficient and to focus on reducing regulatory burdens without compromising the quality or the utility of data. That is the challenge for the next couple of years. And it starts with streamlining reporting requirements. EIOPA is actively working on reducing the reporting burden through initiatives like simplifying our guidelines, and Solvency II review is an excellent opportunity, through developing a common data dictionary, for streamlining data collection and refining reporting and disclosure frameworks. These actions will reduce the burden on industry while ensuring that we still can collect what is meaningful and necessary. Efforts to reduce burden should go beyond piecemeal cuts. Let's not just run in, cut something out and think we're finished. I actually think we need to address the root causes of complexity in regulation, which often result from trying to accommodate too many interests or from combining too many activities in one legislation. And here I say retail investment strategy, I say horizontal legislation, I can also say VIDA, where the Commission started with a proposal with level 3 text, and I think we're up to 15 now in the negotiations. But that does increase what we are producing and then what we need to implement. And this is also important. Smart regulation must consider both implementation and enforcement from the outset. When there is a political agreement, there is no implementation yet. That still needs to happen, both by the supervisors as well as by the industry. And that takes time and it costs resources. So we need to balance the EU and the national perspective. We need clarity and consistency, and we need to have a holistic view of all legislation that is coming and putting it in a pragmatic order. Likewise, we also need to explore ways how we can collect data and share them further. But ultimately, we need to find a way to strike a balance between reducing the regulatory burden on the one hand and ensuring on the other hand that we have the right data to monitor risks and markets. Ladies and gentlemen, these are the 5 imperatives, and I think it sums up to a broad extent the agenda we have in the context of all the risks we see happening around us. It's being robust and resilient, live our purpose and protect, doing it in a fair and inclusive way, while being conscious that we need to be adaptive, data-driven, and strive for smart and efficient practices. This should become the practice going forward, and we stand ready to deliver on that. So in closing, I would like to say that when I say EIOPA stands ready on that, it is as an authority that is supported, that is actually a community of 27 national competent authorities that work together, implementing and enforcing what is needed, flagging areas where we should work together more. And therefore, as that group of supervisors, together with my team here in Frankfurt, we stand ready as the consumer authority, ensuring fair value for money and inclusion. We stand ready as a hub for insurance and pensions data, sharing insights where possible, leveraging new technologies, and engaging in a dialogue with you on that. And of course, we also stand ready as the authority for effective prudential supervision, ensuring consistency and fostering convergence. If we focus on these areas that I just described, I'm sure that the benefits will extend not only to consumers, but very much also to us as an industry, thereby enhancing the competitiveness of Europe. Competitiveness should really be about the European Union coming together, speaking with one European voice, standing strong in the world, and it should not be about 27 competing with each other. And I know that's not easy, but I do think that's the discussion we need to have. We will continue to maintain trust in the system. We continue to support that dialogue, and we will do that for sure also today. And I'll stop there. Thank you very much.